Hey guys, Akil Stokes here, and welcome back to another episode of The Trading Edge. If you guys are brand new, I am a Forex trader, a trading coach, and one of the co-founders over at Tier1Trading.com. And this is a weekly video that I provide, giving you a look around the markets, showing you what's on my radar. If you don't do so already, make sure you follow me on social media. Also, make sure you check out the Trading Coach podcast. And before we start this video, do me a favor, hit that like button, hit that subscribe button, and of course, make sure that notification bell is hit as well. That way you don't miss the next episode. All right, let's jump into things. So here on the Canada Yen, we have an interesting setting up is we have sort of a double-headed head and shoulders setting up. And this is going to be a little bit of a follow-up of one of the setups that we talked about during the week in the live room. But I'll give you guys a little bit of a recap and draw it in. So the original simple pattern formation that we were looking for, or maybe not simple, classic pattern formation that we were looking for, was a head and shoulders pattern that looked like this. Price action extended down, we retraced up, we extended down, giving us a head. This is going to be our left shoulder. This is going to be called our head. We then retrace back up here. Boom, we have a symmetrical right shoulder. And then we finally broke and close above that neckline, both slanted and horizontal. I'll draw both of those in. Horizontal neckline is going to be about right here. And our slanted neckline is going to be, where's my right? There we go. Something like, I got too many things on at the same time. So let me see if I can connect these dots. Something like this, right? And either way to measure it out is right. I personally prefer the horizontal neckline just because I'm a big fan of horizontal support and resistance versus quote unquote trend lines or whatnot. But either one of these is right. It's just going to be a difference in how you attack it. But the point is that we got a higher high, higher close above it, violating that level, giving us a valid head and shoulders bottom. And what you're looking for is a retracement back into that neckline before an extension up. And you can see price action did just that. We came down. We've actually touched the slanted neckline right here, put in a very nice bullish candle. What I'd like to see after this would be a higher high, higher close. That'd be an awesome entry technique. We didn't get that on Friday, but that still can come in the future. Or of course, you can go down to a lower time frame and maybe look for a secondary entry technique at that level. The point is we are getting a retest of that first, that inside, I guess you can say, head and shoulders pattern. And what we would look to do is trade it up. Now, if we look bigger, we actually have a bigger one forming as well. I'm going to change my colors here on my lines. Let's make it a pink, magenta, right? This is going to be our bigger shoulder, right? This whole move down here, again, is going to be from what's called our neckline to our head. And then we come up here, giving us a retest of our neckline. And this move, instead of simply being a retracement after the smaller head and shoulders breakout, this is going to be our right shoulder. And in order to be valid here, if we take these same lines, we'd have to do one of two things. Either A, if you're using horizontal support and resistance, violate this yellow line right here, or B, if you're going to use more of a trend line, violate this level right here. Now, no matter which one of these you're trading, my anticipation would be the same. Look for a move to around this level right here, about 83.40s. I think that's the next natural stopping place in the market if we were to expand. Excuse me. And actually, give me a second here. I didn't measure this out. Looks like we'll probably have, if this indeed is the level, let's see if this gives us a one-to-one measured move here. AB equals CD pattern. Sorry about that. Trying to grab everything at once here. Right around, yep, right around those highs as well would be an AB equals CD pattern. And just for giggles, let's see if we have any Fibonacci confluence there as well. Looks like probably right below a 1618. Yep, right below 1618. So you got a pretty good level of confluence here. You have a Fibonacci extension level a little bit above it. Again, anything in the market, you know, or I should say this, nothing in the market is perfect. So when you're looking at levels of support and resistance, it's not lines in the sand. There are zones. When you're looking at Fibonacci, there are zones. When you're looking at harmonic moves, such as one-to-one measured moves, there are zones. We have a nice little zone here between our 1618 Fibonacci extension level, our one-to-one measured move, that would be our AB equals CD pattern, and really the lower level of structure, which I was identifying. I tend to be a little bit cautious with structure. I tend to look to get out at the beginning of it instead of the end of it. But you can see it's all in this level. So no matter what you're trading here, the projection is going to be the same. But how you can trade this may be different. If you are trading the smaller head and shoulders, obviously you have the validation, you have the retest, you can get involved as long as you get your entry reason. We talk about in our training courses 3 ways to trade a head and shoulders. You can trade aggressively at the right shoulder. You can trade kind of, I don't know if it's conservatively or not, but you can trade during the breakout, and then you can trade after the breakout and the retest. Now, the right shoulder is the quickest way to get involved in the trade, but what makes it a little bit more tricky is that you technically don't have confirmation of the pattern. So you're really anticipating something forming. And again, that's what we're doing in the market anyway, but I like to look for confirmation as well. So if you're a trader that trades the right shoulder, what you can do in this situation is you can actually use the lower shoulder to give you confirmation, right? You can say that, although, you can say that this is a breakout and retest pullback of a smaller head and shoulders. That could be the entry reason that I use to get involved at the right shoulder of the bigger head and shoulders. So something to think about here on Canada yen. I told you it was interesting because we have 2 things kind of forming within each other, but both have the same longer term projection. The next setup that we're going to go to today is going to come on silver. And you can see silver has been in consolidation. We've gone up, we've gone down, we've gone up, we've gone down, we've gone up. But if you've noticed, the range has actually been getting smaller. And again, we're going to bring in some drawing tools. I'm a very visual person, and we'll kind of connect the dots here, right? You see high to high, let's see low to low. You can see kind of the pattern of the market coiling, right? It's condensing. The range is getting smaller and smaller and smaller. And what I would expect here, now I'll tell you this. Now this is something called a wedge pattern or a triangle. They're kind of the same. There are different types of triangles, and those will make a difference. But this is your kind of, I don't know, I guess sideways triangle. I don't know the name of it. But a regular triangle pattern, aka a wedge pattern. And typically the breakout in these pattern formations are 50-50, meaning there's not really any edge on whether we're more likely to break out to the upside versus breaking out to the low side. Whereas you get something like an ascending triangle where the edge or the probability is that we're more likely to break out to the high side, or a descending triangle, we're more likely to break out to the lower side. So I'm not personally a big fan of these type of setups unless I have some type of some prior bias. And I just honestly don't. I can look at silver. I'm here on the 4-hour chart. I can look at it from the daily. And I honestly, if you told me to bet some money on if we're going to break out, if we're more likely to go bullish or versus bearish, I'd have to pass because I just honestly don't know. So this is not a setup that is going to be of any use for me. It may be for you if you guys are breakout traders. Again, a cautious and conservative way to trade it is wait for the break and retest. So break, retest, buy it up, or break, retest, sell it down, something like that. What I'm actually going to be looking for is a potential advanced pattern formation. And it's not going to have to do with the breakout. I guess it could actually come within the breakout or come as a result of breakout. But in general, when I see periods of consolidation, this is when I really start sharpening my eyes to look for hidden pattern formations, because as the market contracts in these ranges and ebbs and flows and goes up and down and up and down and up and down, sometimes it does so in a way that gives you a very powerful setup. And when that comes, you want to take advantage of it. It's February right now, and I've taken about 9, 10, 11, 3 this week, 12 trades, I think, this entire year so far. And I believe that 10 of them, 10 out of 12, have been pattern formation. So, and it's because a lot of the markets are doing this kind of consolidation dance. But there are 2 pattern formations here. We'll draw them both out for you. We'll start with the bullish one, right? So if we take this swing low to our swing high, this is going to be called our X to A. Now make sure you measure this out on your own chart, because there's a massive difference between if you just missed the 618 Fibonacci retracement or if you hit it. That is going to change the setup. For me, I do not hit the 618, so I'm looking at something that's going to be called a BAP pattern. It's going to look like this: X to A to B, B to C, and then I'll be expecting a decompletion down here at about 17, 18. Now, if we look in the opposite direction, right, if we take this high right here as being our swing high to swing low, our initial X to A, we're going to have something else called a Gartley pattern. Again, the key is where that B leg hits. This one does not hit the 618, so it's one thing and not the other. This one does hit the 618, so it's the other thing and not the one thing. That's probably a horrible way of doing it, but hopefully you guys get it. You can always rewatch the video, of course. But we're looking at something like this: X to A to B. Let me just make this the same color: X to A to B, B to C. And I'm not going to draw this on correctly, but somewhere up here is going to be our CD completion. I'm just going to be a little bit lazy for time purposes, so forgive me. I don't want this video to be 45 minutes. And you guys should know, if you're trading this, you should know how to trade an advanced pattern anyway. There we go. That's why I'm doing it. You know why? Because for you guys that are trying to use this video, it's just a signal service, right? And you shouldn't be using, you shouldn't be trading advanced patterns anyway. Now you have to do your work. Now you have to figure out how to do it. For you guys that are trading advanced patterns already, you have a rules-based way of trading it. You know exactly where that entry should be, or where that decompletion should be. And hats off for you following your rules. There we go. That's the excuse that I'm using this week for being lazy. But X to A to B, B to C, C to D. So you can see whichever way this thing moves, you have an opportunity for an advanced pattern formation. And maybe it works out in maybe a few different ways. Maybe you get something like this. This is just thinking really ahead, right? If we look back, especially to this top side right here, maybe that break of the wedge happens. Maybe we come up here, retest previous structure highs, we retrace back down, right? That gives you a nice move of your advanced pattern formation. And then maybe you buy the pullback on the way up if you're someone that trades that way as well. So you can certainly combine a few of these setups together, either using one as an entry for another trade or just using one to predict the other. It's, once you have a general understanding of how the market moves, no matter what strategy or technique you're trading, it's amazing what you can see, and it's amazing how all the different pieces tend to fit together. Next up with our pattern formation theme, this is going to be a short one. We're going to go to oil. It's the exact same thing. It is a potential Gartley pattern. This one I will measure it out because it's not as cut and dry. So what I'm going to do is I'm going to erase this Fibonacci right here. I'm going to take my Fibonacci extension. I'm going to draw it from this leg to this leg, right? This swing high to swing low and back up. And that 127 is going to start my zone for the pattern completion. So I'm looking at something like this: swing low to swing high being my X to A, this first retracement being my A to B, this second retracement being my B to C, and I'm looking for a CD completion to complete right here at the 127. And of course, when I say complete, I don't intend on it. Who knows if it's going to stop right on the dot, but looking at that 127 to the low point of my pattern as being the potential reversal zone, the kill zone, the zone in which I'm looking for price to react and hopefully run in my favor. So a nice simple one. Again, this market is it's just been in consolidation here. So when we're in consolidation, it's a good thing to start looking out for potential advanced pattern formations. Next up is the pound Canada. We're going to take a break from looking at patterns, although actually I didn't see this in my initial analysis. I don't think this is going to be when I'll remeasure it out. It may actually be. But this is going to be a structured trade, right? Here on the pound Canada, you can see that we've made a run up and we ended the week with two very bearish days. And the question I want to ask myself is, well, where is price likely to go to, or where is price likely to run into an obstacle at? And for me, I'm a structure-based trader, right? Structure is really the spinal cord of my technical analysis. So, and what I mean by that is everything I do as far as my predictions are based off of structure, right? Where is structure at? Where are we at in relation to structure? Has structure held? Has structure been violated? That is really what causes me to make my next predictions. And of course, my next predictions allow me to see what opportunities in the market I can take advantage of. So I'm seeing this zone down here and I'm asking myself, this is going to be a decision point for me, because if price action can give me a reversal signal in this zone, I would expect some type of relief, right? Some type of move from down in this structure level. Oh, wrong tool, excuse me. Down in this structure level back up to our previous levels of structure, and a very nice counter trend trading opportunity. One can also look bigger picture. Not the greatest setup for expansion downward, but one could make the case for, maybe if we get a deep retracement, a head and shoulders pattern as well. I don't think that's the greatest opportunity in the world, however, but that is certainly something to look for on, what is this, pound Canada right here on the 4 hour, a move or retest back down into this level of structure and a potential buying opportunity. Now, again, I don't think this is an advanced pattern formation down here, but let me double check. This is not a pair that I usually follow, so I'm not too familiar with it, but I think this is going to be, all right, that is a 618 putting me on Gartley alert. I don't think my second 618 is going to be hit. Okay, yeah, so I don't get a valid C leg, so I'm not going to be an advanced pattern formation for me, but you can still look for Fibonacci confluence there as well if you want to build your case for entry, and that's something that we do as well. You know, we talk a lot, or I talk a lot on the internet about, you know, as traders, our job is to make predictions. That's what we do, but it's I think people kind of misread what I mean by that, thinking that I make a prediction like, hey guys, I think price is going to reverse at the level, and then all of a sudden I buy it right now. No, you're missing a step in between. We want to be predictive in our analysis, make predictions, you know, I think this is going to happen here and prepare for it, but reactive in our execution, meaning that we want to wait for confirmation, wait for signals that the probabilities are more likely to happen in our favor versus not in our favor. And then after that is when we want to make or execute our trade. And those levels of confirmation can come on a sliding scale, right? For a conservative trader, they can look for 18 billion things. For an aggressive trader, maybe they only need one thing. That's part of developing your trading strategy and becoming or adapting your strategy around your life. But we're still looking for confirmation in all cases. And one of the ways we do so is we have something called a CTS system. It's called a combined technical scoring system. It's basically a way to quantify your trades for you guys that are numbers and you want to take even more subjectivity out of the market. Quantifying your trades, right? Giving each thing a point value and requiring either a certain amount of things or a certain point value to occur before ever executing your trade. But it looks like we have Fibonacci confluence, which would be one of those things in a 127 extension. Let me just see if my spidey sense was right. I knew it. I can see it. It means I've been doing this for way too long. So now you have 127 extension down there as well. I actually wouldn't be surprised if we had another one from this smaller inside swing as well. Watch this. Look at that. Lining right up with each other. For you NFL fans that heard the Travis Kelce speech after the Chiefs won the Super Bowl. For you guys that didn't hear it, I sound like a complete idiot, so just Google it, and hopefully that makes me sound a little bit better. So looking for a potential structure-based trade here on the pound Canada. So the next setup we're going to take a look at here is going to happen on the dollar index, and this has actually been a pretty fun chart to look at. We've made a few predictions late last year, early this year about breaks and closes of structure and retests, and we're looking for the same thing here. So you can see the market repeats itself, right? If you're not aware of our higher high, higher close principles, please check out some of the free training we had. Just go over to tier1trading.com/free. We have the Ascension webinar and the Trade to Measure workshop. Understand those concepts, please, because those are going to change your life dramatically in the market, not only on your ability to see what the market is doing and make much better predictions, but your consistency in analysis. You're no longer guessing of, did we break that level? Is that a false break? Is that a violation? It's either black or white, yes or no. And that's going to, again, save your life in trading. But you can see we have a higher high, higher close right here, and then a retest of structure, and then an extension. Well, the same thing's happening right now. We look at our previous level of structure right here. What have we done? We've created a higher high, higher close, right? We do have room to travel higher, right? 99 is sitting pretty right on top of us. Again, you can a little higher than that, but just to be conservative. So something I would look for here is a retest of structure, a pullback, right? Minimally, that's a hard one to say, to 98.50s. We can definitely come back into this level, 98s maximum. If we were to go past 97.36, that would be where the trading opportunity is over. But look for that pullback, and then look for that extension back up to that 99 level or slightly higher. I think that's a good opportunity here on the dollar index. Last but not least, let's take a look at the DAX, and this is going to be kind of the opposite approach. So on the dollar index, we took a look at a higher high, higher close, so a previous level of structure being violated. On this index, right, we're seeing a hold at structure. So this is where I would look for a counter trend trading opportunity. And what I like here on the daily chart is that not only do I have a clear look at what price has done as far as our hold at structure and our highs, right? So what levels I would need to get my stops above to be completely safe. But with the recent ebbs and flows in the market, right, I also have a really good idea of where I would want to take, or where I would feel comfortable taking profits at. And if you notice something here, right, you notice something in common. If we were to take this line and draw it right in the middle, boom, this is a place where previous structures support got violated and became resistance. Would not surprise me if this became support again if we were to rally down. So this is one where you have to go to the lower time frame here. You get a clear level of that support zone right here. Probably not going to have any Fibonacci influence, right? I don't think it's going to be above a 3D2. Maybe from this level right here, we'll draw both on. Yeah, it's going to be above a 3D2. Let's see this minor level, maybe a 50% in there. So right between a 50% and a 618 retracement from our minor swing. But either way, a good opportunity to look to take targets. The aggressive way of entering has already occurred, so you want to take a more conservative approach. One that comes to mind is just waiting for a potential retest of structure, hold of structure. We call that a double top, and then looking to involve yourself on the way down. Secondary targets, I'd go right in here. Again, I'm a very conservative trader, especially when it comes to my counter trend trading. So I'm trying to get in and out of the market as quickly as possible. So hope you guys enjoyed this video. As always, do me a favor and support what I'm doing here by sharing this on social media, hitting that subscribe button and that notification bell if you're new, and of course, hitting that like button before you leave. If you have any questions or comments, you can leave it in the comment section below this video. Tier 1 members, excited about Monday's Q&A. You know that's my favorite day of the week. We're gonna have a very good conversation this week about really what we talked about earlier, about not being too quick to make predictions, and how especially as a newer trader, that can get you in a lot of trouble with paralysis analysis. So it was a handful of questions I got from a trader over last week, and as always is the case, if one trader is asking it, I know at least a few more are having the same question. They just haven't brought it to my attention. So we're gonna do some work on that on Monday. So hope you guys enjoy your weekend. Until next time, plan your trade, trade your plan. Remember, if you want some free training, www.tier1trading.com/free.